Good morning and welcome to Biz Check. My name is Wairimu Jenga. We have a lot lined up for you, and also our various reporters have pitched camp in various parts of the region to bring us up to date with various developments that are happening around the country. And also something to look out for today, we'll be having the former Deputy President Rigathi Gachagua ouster case coming up. It was supposed to start at 9 a.m. but it has been moved to 2:30 p.m. We'll have our reporter Ruth tell us the details of that case. The case will be hybrid or physical before the three-judge bench led by Justice Eric Ogola, Anthony Mrima, and Lady Justice Dr. Freda Mugambi. Something else to look out for: the Inspector General of Police, Douglas Kanja, and the Director of Criminal Investigations, Boss Mohammed Amin, who have skipped courts on a number of occasions, are set to yet again appear in court today at 11 a.m. That is in an hour's time. The duo are supposed to appear physically to answer the questions of abduction filed by human rights organizations over the abduction of 3 young men in Mlolongo, Machakos County. Apart from that, we have the President, William Ruto, who is in the Western region, and he'll be at the EPZ in Busia. We'll have a Chola Simon update us on the same. But coming back now to studio, our topic today is quite interesting. It touches the lives of every Kenyan, its savings and investment options in the face of rising economic pressures. And now savings have become not just a financial habit, but a survival tool. From traditional charmers to modern money market funds, treasury bills, and even real estate investments, the choices are vast but often confusing. And to expound that more on us, I'm joined by Elizabeth Irongo, who is the CEO of Absa Asset Manager Limited, a financial expert who will break down these options and help us understand how to make informed financial decisions. We'll also explore questions like, why is Kenya's savings rate still low despite increased financial services, and how can Kenyans safeguard their savings from inflation? We have that and much more lined up for you. Thank you, Elizabeth, for joining us in studio. You are so much welcome.
Thank you, Wairimu.
Now, we just have to give an overview of the savings culture in Kenya. We know it has stagnated at 12% compared to Africa's savings rate at 17%.
Sure.
In the next couple of years, looking at how Kenyans are surviving and the economic pressures that are in the country, what would you say the future looks like for the savings culture?
Good observation, and very interesting that you have observed. We've stayed at the 12% for the longest. As a nation, I think the wake-up call for deliberate savings culture came in during COVID, when everybody was disrupted from their economic activities, and they became acutely aware that they needed to have savings for them to survive such kind of catastrophes that can come anytime. So in my estimation, I think that the leap towards higher savings is on. We are on a trajectory which is good. I hear more people ask about savings more than before. I've been in the industry for more than 18 years, so I can tell you the conversations 18 years back were very different from what we have today. So the youth, the middle-aged, the old people, I think there is an awakening that has come, and there is effort towards making more savings. I think what is drawing us backwards, it's the increasing cost of living that is taking away and dwindling our, the people's disposable incomes. But granted, the journey is on, and I think once we overcome the current hurdles that the economy is going, I do expect that we will see a rise in the savings rate in our country. So I'm very optimistic.
Okay. Being in a financial institution, what role should banks play when it comes to ensuring that we save as a country, and also ensure that they're encouraging more Kenyans to save?
Very good. I think the role of financial services players is specifically one: provide obviously the vehicles and the opportunities to make those savings and investments, but most importantly, we need to demystify investments, and we need to create awareness and make investments available to as many, democratize it, make it available to as many as possible, and not leave it as a preserve for a certain group in the economy. So opening ourselves or opening the opportunities to as many, so devolving it. I think you'll appreciate that for a long, long time, investments, I think, were preserved for Nairobi in terms of regions, but now we have seen that devolve, and really appreciate that now there's even money flowing in the counties because of the devolution of our constitution. So it's really good that financial services providers would also devolve these, not only as banking services, but expanding to all other areas, including investment, including insurance, and all other forms of investment products.
There are many savings options, and we'll explore each on its own. But I want to kick us off with Chamas. Chamas is the most common saving option, especially even in the rural areas, even in Nairobi, even in the uptown areas.
Yes.
But Chamas have evolved significantly over the years. What are they, and why are they so popular?
Chamas are great, and I really congratulate women especially, because I think they are the bedrock of chamas. And why I say chamas are great is because chamas give you the persistency and the discipline towards putting aside money, postponing gratification for your current need. So that's a first pinnacle of getting to the discipline of saving and investing, that you're able to postpone a consumption today and you actually do it, you get to satisfy it later. Now, that's a good thing. So that's saving. That's just putting money aside. That's what chamas do, and they build that accountability, discipline, and that's a first level of building a good base towards a savings culture. Now, the next thing that chamas need to do and what they need to promote is moving away from just revolving the money, because that's what they do. They revolve a shilling. It's a good thing. However, it only deals with the current need, so consumption mainly. So me and you, we do the chama, I give you the money, you consume and you go. So they need to move from being just a platform that puts money together for consumption to having long-term goals. And we've seen some of them progress towards that, but we need many of them do that. And then we will explode into a savings culture that you've never seen before.
I am in a chama. Are you in a chama?
Yes, I am.
Great. So what are the benefits of joining a chama compared to savings individually?
Accountability is one, and discipline the other. Because if you normally contribute every Friday, you must contribute every Friday. You have friends there, you have maybe even relatives there. They keep you accountable, and of course, the relationships are really, really good. So I say that's a beautiful aspect of chamas. So I love those two especially. Yeah.
Chamas, as we said earlier on, have evolved over time. And they're now investing in assets like real estate management. You're also seeing investing in opportunities that offer wealth creation. From where you sit, have you seen women or group of chamas who come and now say we're going to invest in a real estate?
Yes, we have chamas who have very aspirational, and they have, lofty goals, which is very important. But just to encourage even the ones who don't have a lot of money, because some of the lofty goals, like going to real estate, they're capital intensive. So probably we might discourage the small chamas who are doing really little monies. But to say that even if your goal is not so lofty, it's not you're not going to reach maybe building this big mansion or big building, you still need to have a long-term goal that takes you to a further place than just consumption.
Are there mechanisms to protect chama funds and ensure transparency among members?
Yes. They need to form proper governance structures, and of course ensure that integrity is highly guarded among themselves, because integrity is everything, whether it is in a chama, whether it is in a company, whether it is in government. Integrity. So I would propose that then chamas then embed integrity as a key pillar to safeguarding themselves for future and keeping them going for longer, because that is the one ingredient that can break a chama, and breaks chamas many times. Yeah.
Those are the pros. There are also cons of investing or rather savings with a chama.
Yes.
What are the risks involved?
The risks is especially on the integrity. You could be in a group that you don't know everybody, but you were introduced by a friend, and then just to realize there were rogue guys inside there, and maybe you give them the money, and then they don't show up and they don't contribute the next time. So that's likely to happen because we are governed by trust. So if your members, some of the members break that trust, then you're done. Then you can lose. So those are some of the negatives around chamas because it's a trust-based kind of relationship. The other thing is that chamas just rotate money. So you really are not building or growing your wealth, multiplying your wealth. Rather, you're just moving money from one person to the other one. And money needs to grow. Money needs to work as hard as you work. So even as we start the discipline of saving in chamas, we need to move to the next step where we are saying the chama must then have ways of growing the wealth that they are creating at the base. So I hate to say that the basic chama just does rotation of money, it doesn't grow money unless you're very disciplined that when you get it, you personally take the initiative to grow, but the chama is not growing the money.
Talking about financial discipline, we have seen cases of money being lost in SACCOs. SACCOs is another option, a savings option. But before we delve into that, what are the key benefits of saving and investing in a SACCO? SACCO is one investment or other savings options as well.
Yeah, and SACCO is a formalized chama, isn't it? It is like, it is the next level of a chama which is very well formalized and again with homogeneous group of people. And now we have seen SACCOs evolving to even less homogeneous. Before they used to be SACCOs only for certain groups, if it is engineers, if it is bankers, if it is maybe organization. But now we are seeing SACCOs opening themselves to multiple, groups of people who are not homogeneous. But the beauty of SACCOs is that the structure is formal. So that embeds discipline and governance. So SACCOs are well governed. I know we have the micro SACCOs and we have the big ones. And the beauty is that if they borrow from the government, because there's a lot of information and governance materials they can get, even small SACCOs can have good governance structures which protect the members and protect their wealth.
Okay. Yeah. How has technology, maybe from where you sit, modernized SACCOs operations, and what are the implications for members?
Technology is a catalyst for most businesses. It's undeniable. And we have seen SACCOs adopt technology, including how they communicate to their members, how they keep the records of their members so that the records are much better. Members can access the record of their SACCO savings, and of course, even when they are applying for loans and things like that, they're able to apply for those loans without paper. So they've eliminated the paperwork and the length of time that it takes for you to get a service from the SACCO. So technology is a catalyst by all means, and it's been a beautiful thing to see SACCOs embrace technology.
When it comes to regulation, do you think SACCOs have been regulated enough to ensure safety of members' savings?
I would say to a large extent, yes, but there's still a lot that is done. I think we're still reeling from the pain of the SACCOs that went bust. But I think government has done a lot to ensure that they safeguard the SACCOs and they build the rails that protect the SACCO fraternity from such kind of failure. So I would say, yes, there is effort, but obviously the pain of the past happenings lasts very long. You'll appreciate with me, and it is very important for us to know that when you're investing and you go through a painful or a loss, the pain of the loss lasts very long than the joy of a win. So I think we will live with that pain for a bit long before we can forget that some SACCOs did go past.
Okay, and we'll come back to that conversation. Now coming back to studio and picking up from where we left on regulation of SACCOs and looking at the safety of members' savings. But then again, I want us to look at, Elizabeth, for somebody who might not know how to join a SACCO or how to begin, or rather how to be part of a SACCO. What would you tell, what should they look out for before committing?
Registration. That's the first level. Just get to know, is this SACCO registered by the ministry and by the SACCO society? That's very important, because that will speak to the governance, at least to some extent, saying they are responsible and they are accountable to somebody. So your SACCO should be, when you're joining a SACCO, you should make sure that it is registered under the ministry or under the SACCO society. So that's really, really critical. And then obviously reviews. At least now we have social media, and we are seeing on social media, people getting to review different SACCOs. It's important to go back and read about them and just find out, what are people saying about this SACCO? I know sometimes there is malice in some of the comments that happen, but reviews form a really big basis of telling you majority of the people are actually maybe positively speaking about this SACCO, or they're saying, I've never heard about it, and so you need to be more careful about joining such a SACCO. So just do more due diligence around the people behind it. And then the other thing is find out who are the leadership. And again, using internet, it is possible for you to get more information about the leadership of a SACCO, so that you see if this is the leader of the SACCO, to what extent are they negatively maybe mentioned in the media around their integrity, especially what have they done for the nation or for themselves, so that they are in this leadership. That should give you comfort, because if you encounter a person with poor quality and mentions in the media, then you have a possibility of saying, I don't want to be in this kind of relationship, and therefore you can avoid a pitfall.
Okay. Yeah. Talking about integrity, we have seen Kenyans invest or save blindly without even doing the due diligence that you're talking about.
Yes.
How else can Kenyans do they need a financial expert to be able to advise them on various options that they need to invest in or save?
Good question about financial expert, but even selecting the financial expert is also another job, and you need to be really aware about how do I even select that financial expert. But maybe let's start off by saying, how do you identify the red flags in a Ponzi or a poor investment? Because there are red flags which you can identify as yourself even before you go to the advisor to give you advice. So as a person, you need to identify several red flags that can give you a hint of something is not right about things. The first red flag that you need to identify is when you're promised very high returns with no risk, with guarantees. So things like guaranteed 20% per month, return, that kind of thing. That's just obnoxious. That's a bad flag, and you should be able to pick it out by yourself. The other thing is you're hurriedly being told if you don't get in, you're gonna miss out. This thing of being hurriedly pushed to sign off, that's another bad flag or red flag that you can pick in an investment which is more of a Ponzi. The third thing that you can check out on investments that are not that are bad or poor is the fact that they do not explain exactly how they invest or how they make the money. They just tell you, people are getting paid, just get in. You get the point? Just get in. Everybody's getting paid. Even this person was paid. You've just been given, stories around the returns will be made. Don't ask many questions. They should be able. Investment is very It's very, I would say, driven by certain fundamentals. So if you can't get fundamentals of how money is being made, but you're being promised return, run. Do not wait. You're gonna be washed. Then I think maybe the other one is obviously if you're promised no risk, that there's no risk, this is guaranteed, this is a sure bet. In investments, the theory about investing and returns is about taking risk and the possibility of risk. You should be able to know, okay, what are the risks that I'm taking? The moment I promise you a sure bet in an investment, that's a red flag and you can run away. So those are some of the things that you can actually use as an individual to screen an investment or a product that is being brought to you. When it comes to investment advisors, they are really, really good investment advisors. Today, at least, there is Institute of Certified Investment and Financial Analysts. You can be able to go to their portal. This is a government body that can give you the listing of all the people who are actually certified to do investment analysis and investment advice. Obviously also going to CMA and checking, is this company that is selling me an investment actually licensed by the Capital Markets Authority? That's a good one. Or the Circle Society. So checks that are really, really glaring. But for investment advisors, ask them about their history, where else have they worked, and probably maybe if they can give you a referral of investors they have been able to help in the journey of investment.
Okay, picking up from where you talked about the Ponzi schemes.
Yes.
Most Kenyans are in a debt trap where they are picking, or rather they are taking a loan from this, let's say, digital mobile loan to pay off another digital mobile loan. Yeah. How can, even if, we are in the beginning of the year, but they also want to get out of this debt trap, what are the things that you can tell them?
Okay, debt by itself is not bad. And we say that because I work for Absa Bank and we do give debt. So debt is not bad, but it is what type of debt you get into. Consumption debt is dangerous. It's not bad, it's dangerous. It's dangerous to the sense that you're taking money, you're borrowing money to consume, not to build wealth. So the moment you borrow for consumption, then you could be trapping yourself into a vicious circle of debt, like what you're saying. So you pick money from this mobile app, you pay from this other mobile app which you have borrowed, or from, it is Peter to Tom to that kind of thing, which is very dangerous. So how do you get out of this? The first thing you do when if you find yourself in that situation, face it, it's a reality. Ask yourself, how much debt do I have? List your debt, and list the debt based on the rate of interest that you're paying on that debt. List the most expensive to the least expensive. You'll be shocked your mobile debt will be the most expensive, will be at the top, because they're charging maybe a daily rate. Now, once you list that debt, then come up with a strategy to clear that debt or to reduce. Two things that you can do with debt. You can snowball. Snowball meaning you can be kicking the highest, the most costly debt out. You pay the most costly first down like that. So you clear it by just going each of it. If it is a mobile debt, I would say pay your mobile loans quickly. They are expensive, damn expensive. So you need to be very careful. Like that, and then you reduce and you avoid picking new debts. But how do you get that? Do you get to clear that debt? It's you create new income streams, because debt will only be paid with some income that you have, and not by borrowing another person. So either you look at your budget also, and you cut out waste. And we say up to 30% of our income is is not accounted for. So yes, we mentioned the government does not account for 30% of the budget they have, but even individually, I can challenge you. 30% of your income, you cannot account for it, meaning there is an opportunity for you to cut out on waste and hit on your debt and reduce your debt load. As you reduce the debt load, try and work on income streams. Increase your income stream, whether it is a hustle, an extra job, add a new skill so that you can be more employable and more qualified, and you get maybe a higher pay and things like that. So those are some of the strategies you can use to actually reduce your debt, and of course avoid living above your means. By all means, just be honest with yourself, put yourself in the right place so that you do not overspend and continue falling into the trap.
And even as a government, we've been talking about living within our means and not going beyond what we cannot be able to afford. That's why also we have found ourselves as a country in a debt trap. But let's say you have your 5,000 extra, or your 4,000 extra, or even 1,000.
Yes.
Is money market fund an option?
Absolutely. In fact, money market, we say it is the most basic investment product a person can get. I know you called it fancy, but I feel like it is the most basic. It is where most people start, and it's where we are as a country. We're becoming, money markets are becoming the in thing, and I love that. Money market will be your option because money market gives you several benefits. Money market allows you to start small, gives you a return on your money as long as the money is invested, gives you an opportunity to access the money if a need arises, whether in whole or in part, which is very good. It allows you to enjoy the economies of scale, because your 1,000 alone would not make you a return. But when you're in a money market fund, you're investing together with other like-minded people. So for example, you're in Absa Money Market Fund, we are 15 billion in size. So it means 1,000 shilling and 1,000,000 shillings are going to earn the 12% that the money market fund is giving you. How amazing is that? So it means it qualifies everybody. It gives everybody the same platform. So it's a very fair platform and allows everybody to earn and to enjoy the services of a fund manager who is qualified to go and screen investments and make the investment decision on your behalf. So those are some of the benefits, and I would say every Kenyan, if you have a bank account, the next thing that you must have is a money market account. You cannot stop at banking. You must move to the next level, which is investing in a money market fund, and then we grow from there. We don't stop, we keep growing.
What if you don't have a bank account? Can you invest in a money market fund? And also tell us how you can go about being in a market.
Okay, so let's start with the first one. How do you get into a money market fund? A money market fund is open for everybody. It is it's as simple as, like I said, investment. So you only need your ID and a PIN, and a KRA PIN. Once you have those two, you can be able to open a money market fund. Why do we insist you have a bank account? And I say that I say you must have a bank account because we want to promote savings. The first level of saving is separating yourself with your money. Money in your mobile wallet is so attached to you. It is with you day and night. It's so accessible, you'll easily get it. A bank account gives you, first of all, a way of discipline of separating your money with yourself, so that it goes to a provider who is safeguarding it for you, instead of keeping it in a wallet. So I'd really, really ask that we avoid only having mobile wallets, we have bank accounts. Two, banks, the day you'll want a loan, banks evaluate your bank history, not your wallet. Yes, your wallet sometimes will be considered, but if you have a bank account, you're more credible. So I would say have both. Always have a bank account. So then once you open your money market account, create a standing or an automatic way of saving. Don't wait until you spend, then you save. You save before you spend. Many times we spend, and then we say, I'll first deal with everything I need, and then I save what remains. You should always save before spending. So when you get your income, immediately push your money to your investment account or to your bank account where you're saving, then to your investment account. That way, when you have automated, the discipline checks in. It almost becomes your charmer. You're accountable to yourself. So that's the basic way of dealing with money market funds. Very basic, but very fundamental and very good for yourself and for the economy.
Okay. Earlier on, you talked about a 12% return when you invest in a money market fund in Absa.
Yes.
Then how do money market funds protect investors' money?
Oh, they are regulated. So money market funds are regulated by the Capital Markets Authority, and the regulations govern that. A money market fund must have a founder. So for example, when you come to Absa, we are the founders of Absa Money Market Fund. So there's a founder, there is a fund manager, there is a custodian, and I'll tell you what each of them does so that you see the difference. There is a custodian and there's a trustee. Okay? Now, the founder is a person who registers the fund. That's amazing. But it goes ahead and says the founder, we need to have a fund manager. A fund manager makes the decision, the investment decisions. So for example, Absa is also is a founder and the fund manager of the scheme. So we not only founded it, we also manage it because we are a licensed fund manager. That's critical. So a fund manager must be licensed by the Capital Markets Authority. Then you have a custodian. Now, a custodian is a banking entity that holds the assets of the money market fund. And that means that the founder and fund manager do not hold the assets. They only invest on your behalf. The custodian is holding the assets of the fund. Then the trustee comes in. A trustee is a registered entity by CMA again, that looks at the welfare of all the members of the fund, because all of us members of the money market fund cannot be going to the fund manager to say what they want. So the trustee is their voice and their eyes and the ears on the ground. So very good structure that protects the membership and makes sure that we invest in the right way. Then CMA has guidelines. So the fund manager doesn't just wake up and do what they want. CMA has given us guidelines of how must a fund manager invest monies of a money market fund. So that means there's a protection, because you cannot just wake up and do what you want. So very good governance structure that has been created, that is protective, and that is what should give every Kenyan comfort around money market fund.
Okay.
Yeah.
Are money market funds suitable for people with limited disposable income? And I'm bringing this because of the high cost of living you talked about earlier on, the economic pressures that Kenyans are having as a result of the payslip shrinking over time due to increased taxation and also the high cost of living.
Yeah.
You've talked about you can even invest 1,000 shillings. So are money market funds suitable for people with disposable, income rather?
Yes. They are suitable for everybody. They are suitable for everybody because it's a way of putting aside even an emergency fund and allowing you to save whatever little you have, but maintain the discipline and the consistency. And on top of that, beat inflation so that you don't put money under the mattress and lose value. So they are suitable for everybody. So they are not a preserve for the high net worth people. They are suitable for everyone. Yes.
Okay, so do Kenyans need to have different savings account? Let's say for consumption, you have an account for consumption, you have an account for, in case I ask you for money, you have that account that can be able, if you do not have, then you can tell me, there's no money there.
Like wallets.
Yes,
like a money market can have different wallets. Yeah, that's an evolution that is coming, but definitely, you know, it is very mental. It is the traditional way where we would put a bahasha for thieves, a bahasha for thieves, a bahasha for thieves, but now we're just putting it in a platform and telling you, oh, this wallet is for your emergency, this is for your car, this is for, but mentally it's all your money. So it is good to have those wallets, but at the end of the day, yes, those are very nice goals and they can be done in a money market fund, but you don't have to sweat it. If you're disciplined, when you grow that discipline, you can actually be able to save it in one pot because it's all yours. But yes, the vehicles are nice, the goals are nice.
All right.
Yes.
Now let's talk about treasury bills and bonds, which is another investment option and a savings option. I know when Kenyans hear about treasury bills and bonds, they think it's jargon. They do not know where to go when you want to buy a bill or a bond. I'd like you first of all to give us the difference between treasury bills and bonds for our viewers out there to understand.
Okay, very well. Now, a bill, a bond. A bill basically is a government borrowing. It's government borrowing from us, either from individuals or from corporates. They're borrowing. But a bill will be short term. They're only borrowing, the government is only borrowing for less than 1 year, maximum 1 year. So the government of Kenya ordinarily will borrow money from investors for 30 days, for 91 days, there's no 30 day, it's coming.
All right.
91 days, 182 days and 364 days. So 3 months, 6 months and 1 year. So that's what we call a treasury bill. And the other difference about a treasury bill is you pay what we call in investment jargon, discount. So if, for example, you're lending the government 1,000 shilling, they will say, a treasury bill, you will pay, for example, 900 shillings, and then in 3 months they'll pay you 1,000. That's a discount. So you pay 9. So there's no interest that is paid in between. Your interest is the difference between the amount you'll be paid at maturity and the amount you paid at the beginning. That is how a treasury bill works. Now, a bond, on the other hand, is long-term. So government is borrowing for more than 2 years. Currently, the government of Kenya has borrowed up to 30 years. So there's some bonds which are 30 years. And what a bond does is the bond promises you a fixed interest rate every 6 months. So when you buy a bond, for example, a bond that is, say, 2 years, what government will promise you is that they will pay you 4 times in the year. Then finally, on the last one, they will pay you the interest plus the final maturity amount. So you lend them 1,000 today, they promise you 10%, so they'll pay you 5% in the first 6 months, another 5% like that for 2 years, and finally they pay you back your 1,000.
Okay.
So you can see there's a cash flow that is coming in a bond.
Okay.
That's the simplest I can make it.
All right. How
Yeah.
can beginners invest in these bills and bonds?
I know that there are many ways you can do it. One of the ways is your bank can help you buy. So you can come to ABSA and we can be able to help you buy your bond or your bill whenever you want. And the good thing is that you get advice. Alternatively, you can open a DAO CSD account. And here I am drumming support for the government. So you can open a DAO CSD account. This is a central bank platform that allows many Kenyans and even in diaspora or around to buy bonds and bills directly from the government. So you can be able to use those two platforms, or even brokers. Brokers. And in this case, I am talking about brokerage firms that are in the NSC, Nairobi Securities Exchange, not land brokers. We also have brokers in the exchange.
Okay. I'd like you to explain to us what kind of returns one can expect. Let's say a 91-day treasury bill.
Yes.
What are the kind of returns that you will give us the details of that after we take a short commercial break. We'll be right back.
Stop being sarcastic.
This kind of excessive praise is cruel. Did you see Miss Leo's face?
I'm just getting a divorce. I'm just getting a divorce as an older woman. Do they all think that Lao Xue abandoned me? Why can't it be that I abandon him?
I understand it now. In the end, life is either endure or strive. Enduring in the end still requires striving.
Overtime? Overtime is good.
What does it have to do with you?
Ni mambo gani ambayo sisi huwafunza wadogo zetu ili waweze kupata manufaa katika dunia na kesho akhera?
Ni maneno yenye kupandana, maneno yenye kuzidi, maneno ya ziada. Ni neno moja lakini ina uwingi wake, ina faida mingi ndani yake.
Welcome back, and we apologize for that technical hitch right there. But we've been talking about savings options, and we have talked about 4 of them now in the treasury bills and bonds, and we've talked about the differences between the bills and bonds. And we were asking Elizabeth just before we took a short break the kind of returns one would expect from a 91 treasury bill.
Okay, good question. Now, bills trade every week, so the interest rates on bills change every week. So if you look at last week's auction, you'll find that the treasury bills are trading below 10%. So the rates are actually single digit. So you'll get just on or about 9%. That is what you get before tax, because there's taxation that is applied on the rate that you get. So there's withholding tax. So that's the kind of return you get. Now, I know many people say 9 is such a miserable return. It is not.
It's an annual.
It's an annual rate, and it's not a miserable
Right.
return. How you ought to look at your return that you're getting from the government is that the government is the best, lender you can get. The person who you can lend to, and you almost have 100% guarantee that they will pay you back. The reason we say that government is the best, borrower of your money or lender for yourself is because government will pay you from their taxes, which you are paying, and government can print money. So we consider government investments as risk-free. So that is why they don't earn a very high return. And I know some people may say, just a few months, the returns were about 17%, 16%. Yes, that was just a period, but ordinarily governments don't pay very high returns.
Okay. What's the minimum amount you can invest?
The minimum amount you can invest directly from when you go through Dow CSD for a treasury bill is 100,000 shillings.
Okay, what if I come to ABSA?
If you come to ABSA, because of the effort and the research and everything we do, we normally buy treasury bills for people from $1 million and above.
Okay.
Yeah.
Are treasury bonds and bills a safer option for long-term savings option, and also compared to other products?
They are the safest. Government securities are the safest kind of products that you can ever have in a portfolio, but they shouldn't be the most rewarding. That is why you find somebody who invested in a plot gets to double their money. But you will not find a government security telling you after 5 years we have doubled your money. No, they just pay you that steady interest rate that they promised you at the beginning, because the risk is very low. So fixed income securities, and that's what we call them, government bonds, fixed income securities, they offer you stability and steady cash flows over the life of the investment, but not capital growth. The capital growth will be limited unless you trade them. Capital growth, for those who trade, they may get capital growth or even capital losses, but if you're buying and holding for the life of the bond, you only get the cash flows that are promised. Unlike other investments which are a little bit more risky and they promise you higher return, maybe even shares. When you buy shares, you can buy today at 10 shillings, and if the company is performing very well and the stock market is doing very well, you could find the share price has gone to 20 bob, and that means you've got 100% return. But in the same breath, the share price can go to 2 shillings and you also lose. So the risk is around the movement of prices in other assets, which we find is a little more limited when it comes to bonds investments.
Okay. Talking about another savings option, that is the high-yielding savings account.
Yes.
And fixed deposits. Statistics show that Kenyans are preferring high-yielding savings account rather than low-yielding savings account. Yeah. And you have seen the fixed account income, or rather the high-yielding savings account becoming popular and cashing in, hitting to about 2 trillion shillings as of July 2024. But before we get into the math, what is the difference between high-yielding savings account and a fixed deposit account?
A high-yielding savings account is an account that has restrictions in terms of how soon you can, how often you can get the money out. So basically it is like your current account, but what they put there, the bank will say, you cannot draw down from this account. So you have a restriction. Maybe they tell you, you can only withdraw once from that savings account or none, so that you earn the return. Otherwise, if you be going there like it's a current account, no interest is accrued to your account. So that's what is a high-yielding savings account. Now, when it comes to fixed deposit, that is a structure. That is an investment, almost like an investment product, where you're entering a contract with a bank and saying, Bank X, let's say ABSA, have my money for 1 year, for a contract of 1 year, and you shall pay me, say, 9%. That way, you get, you've entered a contract, you have promised the bank that you're going to stay, you're leaving the money there for a specified period of time, 1 year, 6 months, or even 2 years. And the bank has also promised you that for the period you have left the money with us or given the money to us, we are going to pay you X% for that period. So that's the difference. So the current account, you're the one who determines, but the rule, the terms and conditions are very clear about the high-yielding savings account, and the terms of a fixed deposit are also very clear. So terms and conditions of both, they will apply.
They will apply.
Yes. Okay.
Then why are fixed deposits account becoming so popular? As I had earlier indicated,
yes,
data showed that 2 trillion shillings from the CBK has been saved in fixed savings account.
Okay. From individuals, I think from 2022, we've been on a high interest rate environment where interest rates rose all the way to levels of about 18.5%, so very high interest rates. And for that reason, people being wise, because they are rational beings, they would prefer to lock the high rates, and that is why you saw them taking the fixed deposits. Another thing that could have contributed and may have contributed to the high fixed deposits in the bank is the alignment of money market funds and the growth in money market funds, because money market funds are by regulations only allowed to save in short-term instruments that are safe. So money market funds, I think, have grown threefold since 2020. So all that money, majority of that money is in fixed deposits. So you'll see them also promoting the growth of fixed deposits in our banks. So it is institutions and also individuals, and the environment was just perfect for it.
So you advise Kenyans to pick either?
Yes, but the tide has changed.
Okay,
now fixed deposits are not earning those very high returns, so you'll find people will start reallocating to higher risk instruments, because now Treasury bill has gone to 9. So if you go and check your fixed deposit with your bank, you will find that the fixed deposits have also come to single digit, and that means if you're looking for wealth, you're going to have to reallocate risk from short-term investments to longer-term investments. So you might find that that shift will happen now, and we expect it to happen.
Okay.
Yeah.
Now, talking about pension schemes, because time is not on our side, we're seeing contribution-based plans like the National Social Security Fund or private pension schemes being talked about all over the country, and also the government also coming up with their own, the Hustler Fund. It has also a savings option. How can Kenyans maximize benefits from this private pension funds and also the National Social Security Fund?
First of all, that's mandatory. Pension now is mandatory in Kenya. It wasn't mandatory, so that's a good thing. And we celebrate that policy that has forced people to save for their retirement. The way you can take advantage is, one, if you are already in a pension scheme, please do not touch your pension benefits. Keep them for your retirement. Your old age requires funding, and that is the money that will take care of you when you are, old. So do not touch them. Then the other thing is to make sure that your investments are being invested in the most optimal way. Keep your provider accountable for the returns they are giving you, so that you get optimal returns. And I say optimal because of it's a choice of the assets that they invest in. Optimal returns throughout the life, because the beauty of investing is around the length of time you invest, holding it. So if you're investing for 20 years, you have better gains than somebody who invests for very short term. And the other beauty is, of course, the returns that you're making from that investment. Other benefits from the pension is that there are embedded benefits, things like post-retirement medical. You can be able to start saving aside for your post-retirement medical fund. That's something that you can take advantage of. One, because now government has given tax benefits for anybody who is saving towards a post-retirement benefit. So if you put aside even 5,000, you will get tax exempted for that amount. So it reduces your tax that you're paying back to the government. And then the other thing is obviously housing. There are benefits towards accessing housing using your retirement benefits, but the rules of the trust deed and rules of the scheme will apply.
Okay.
Yeah. So many benefits.
Yeah. Now, 2 years ago, the government did increase the NSSF contribution from 200 to 2,160 shillings per month.
Yes.
Do you think the previous amount was insufficient? The amount is supposed to actually to double in February.
Yes.
And do you support the move despite the shrinking payslip?
Yes, I support the move. Sometimes you have to do the hard thing and make the hard decisions. It's unfortunate that it came during a very difficult season, but it is the right policy for the people and for the government to have done it. Countries around us in East Africa did it a long time ago. We are just late comers in this party. So it is a good thing. And the increase is just 6%. So they are only taking 6% of your income and putting it aside for your retirement. It is to fight old age poverty. If you look at the government, budgeting around people who are 70 and above who need support from the government, it can tell you that we are building to a crisis if we continue doing things the same way, and we'll have many old people who government cannot be able to support. And so old age poverty is something that needs to be fought when you are young. So it really means a lot. It maintains your dignity later in future, because you can imagine working all your life and then later on you're a pauper. It really takes away your dignity. So pension maintains your dignity and preserves you and gives you longevity, because you have something to live on, especially financial capability. So I like it. It is just that the season was difficult, but I think if you put the right lenses, you'll actually appreciate what government has done.
Okay, moving on to other alternatives, or rather for the informal sector, especially the pension schemes for informal sector. We see they've been left out, but also we saw NSSF roll out a Haba where a scheme where you can be able to save as much as 25 shillings or minimum 25 shillings. Is this the right move for the informal sector?
Yeah, and yes, for the informal sector, it's very important to think about your retirement, because all of us will get that. Retirement is not moving out of job. It's just your body getting to that stage where you will not be able to do what the economic activity you've been doing. So getting into a pension is very important. The Habas, the individual pension plans. Now there are individual pension plans. You don't need an employer to get into a pension scheme. Even in ABSA we have that. You can be able to start contributing according to your ability. So that's really, really important. And everybody needs to consider having a pension plan in place just to safeguard and to take advantage of the tax benefits that come with it.
Okay. Yeah. What of products combining life insurance and savings, offering returns over time?
Yeah, good products. Insurance safeguards us because we face the, life can turn anyway. You can be incapacitated, you can die. And so insurance wrapped products have a place of their own, and it's important for you to consider, because when you have an insurance wrapped product, what you're doing is that you're also safeguarding the next generation when you're not there, meaning that you're going to take care of your child even if you were to die. So even in your demise, the people you love will continue enjoying life as though you are still alive. So you're protecting them. So protecting even the next generation. So they have their place. It's a risk management as much as it is an investment product.
Okay. Yeah. How do these plans work? And are they worth considering? And what should Kenyans look out before committing?
Yeah, they work. They work because they give you a return, what they call bonuses, but they also protect you, give you life covers that allow you or your loved ones to get paid in the event that of your demise. So they have benefits which are double-edged, where you can get the bonuses. If it matures during your life, you get the full amount plus the bonuses. But should you die before the maturity of your product, they have that cover which allows your loved ones to access them later on.
Okay. Yeah. As we wrap up, I would like to hear your final remarks. I know there are various savings options we have not talked about. There's real estate investment is a lot. And I'd like you to touch on that as well as we wrap up as well.
I'd like to say that investing, saving and investing is a critical part of your journey, and you ought to start thinking about it at a very early age. I think empowering our children and our young ones and our Gen Zs early enough is one way of winning it, because then you embed the discipline very early. It's not something you start when you are 50. So my call to action is start wherever you are. It's also not a preserve for the wealthy. So don't wait until you earn the six-figure salary. Start with whatever little you have, build the discipline, and then even when you get that a lot of money, you will be able to even go further. The other thing is that empower yourself with knowledge. There's a lot of knowledge, especially now in the internet age, for you to empower yourself and get to know much more than what we could have known when we did not, only things were in books. So take time, learn a lot, and be curious about investments, and of course ask the right questions before making any investment decision.
Okay.
Yes.
But if you need a financial expert,
please come to us.
We can come to you.
Absolutely.
Great. Thank you, Elizabeth Irungu, talking to us about savings and investment. And as she has rightly put it, savings and investing aren't just for the wealthy or the financial literate. They are for everyone. And for chamas and SACCOs, to money market funds, to treasury bills and bonds, and to emerging options like digital platforms, which we will touch on another day with Elizabeth here, and also agribusiness, there is something for everyone, no matter your income level. And as Elizabeth Irungu has highlighted, building a savings culture isn't just about the tools, it's about financial discipline, planning, and understanding the options available for you. We put a cap on the 1 hour conversation we've been having about the various savings options, and we take you now to Tech One with Alan Aoko.